Good day, and welcome to another Answers Weekly Wraps. I am Vip Govender. This week we're going to be a little different. We're going to focus on Trump. I know we've had a special, Trump segment for the last, basically since the inauguration. But I think given the volatility, the craziness we saw this week, which is almost entirely driven by Trump and its post-Liberation Day, which was announcement, I think that we kind of need to understand what the US president is thinking, what his plan is going forward, and what impact it might have on the market. So, for those that were not living under a rock, you know that the market basically came down significantly over the last week or so before rallying shockingly. One of the biggest rallies, even in percentage terms, and definitely in absolute value terms, in history. And we haven't basically calmed down since then. And this has been driven by the Trump tariffs. Trump, for those that don't know, has instituted tariffs on most of the world. In fact, all of the world, including uninhabited islands. The places that we excluded are places that are already under significant sanctions or trade restrictions, places like Russia and North Korea. But generally for the rest of the world, including allies, including countries that have a deficit or don't have a deficit in the US, who have no tariffs and have tariffs, the minimum tariff of about 10% has been put into place. In some cases, it's gone up significantly higher. Like places, I think China has the highest one at the moment, which if you look at everything together is in excess of 50%. So why is Trump doing these tariffs? What's his plan? Is he just trying to do something that makes no sense? Is it something that we can say is going to be definitely the bad thing to do? And what's the outcome going to be for you and your investments? So why is Trump doing these tariffs? So Trump has had a belief in tariffs for 40 plus years, at least as long as we can have evidence of him talking about these things. So if you look at, for instance, interviews with him in the 1980s, he was talking about tariffs, talking about how the US has been taken advantage of. So this kind of fits into a philosophy he's had for more than half his life. And the philosophy basically is the following. The US is open to the world, but the world is not open to the US. The US lets anyone come in, sell what they want to in the US, but the same is not reciprocated. And we are not seeing a fair treatment of the US manufacturing sector, the US economy by foreign countries. And Trump believes that he can do something to basically make that back. So why? So the tariffs basically are there to create a fairer playing field for the US. Not to say it's going to be an even playing field, it's just that there's going to be the same amount of handicaps on the other country as there are the US. That's his view. Generally, people talk about free trade, they want to be no handicaps, everybody's free. But Trump is saying this is what free trade, he wants more like fair trade, which is basically, if he thinks that you do something to him, he wants to do the same thing to you. That is the idea. And what does it mean as part of a larger economic plan for the Trump administration? Well, the thing he wants to do is raise money by having tariffs, not just have the tariffs basically punish those that are basically trading unfairly with the US. Why? He has a belief that in the early 20th century, when income tax was introduced in the US, around about 1913 or so, that it was a mistake. That we are taxing the average person by taxing incomes, and we should rather be taxing foreign companies or foreign countries that want to sell into the US and use that revenue instead of using the income of US citizens. He believes that we will have probably hundreds of billions of dollars being raised by the US government by tariffs, and those hundreds of billions could replace some of the income tax being paid by American citizens. Now, let me first state, if this does work, if Trump is able to actually execute on this thing, it would be one of the greatest political victories in history. What do I mean by that? I mean, if Trump is able to actually get enough money by tariffs in order to go out and reduce income tax, and the number being talked about is getting income tax to zero for anyone making $150,000 a year. That's close on 3 million rands a year. Now, the US is a rich country, but 3 million rands is a lot of money, even in the US. If you were able to reduce taxes to zero for people making less than about 3 million rands in the US, $150,000, that is going to be a huge political win. To give you an idea, the median tax in the US is less than $70,000. That means more than half the people in the US make significantly less than $70,000. So, in parts of the country, it's like 50,000, some places like 60,000. But 70,000 is basically, more than half the country makes. And we're talking about raising or cutting taxes to zero for more than half, more than double, rather, that $70,000 barrier. So we're talking significantly more than half of all income earners in the US right now paying no income tax. If you're able to do that without crashing, the budget, without basically causing a financial crisis in your country, you are going to be the most popular politician that country has ever seen, anywhere. If in South Africa, for instance, the DA came into power and operated everything in the country exactly as it is right now, but cut income tax for everybody making less than $500,000 rands a year to zero, the DA is going to be re-elected for the next term, and the one after that, and the one after that. Okay, it will be an incredibly popular political, measure. If Trump is able to get his tariffs in place and get them working the way he wants them to work, without causing enough distortions in the way the economy works, without causing massive distortions in how the whole global trade system works to such an extent that it's going to kind of cut the amounts of money related to tariffs or crash the economy in other ways. And he's able to take that money and then translate it into a tax cut for people basically making $150,000 a year. A tax cut basically to zero for income tax levels for people making $150,000 a year and below. That would be a massive political win. Can he achieve this? Every single major economist, professional economist I've seen write about it, does not think he can do this. Everyone. You can find people like Peter Navarro and so on, some like fringe economists out there who basically say, yes, this is the idea, this is how it'll work, and etc. etc. But you talk about the people that win the Nobel Prizes, you're talking to people that have professorships at Harvard and Yale and Oxford, and the big places. None of those people believe that this is a plan that can work. Why? Because the impact, first of all, on putting up tariffs as high as they would be, to generate a $500 to $700 billion of revenue, would be significant on the U.S. economy. You would basically destroy supply chains globally. That would result in higher costs for U.S. consumers. That would mean that people have high inflation to deal with, possibly causing the Federal Reserve to maybe start hiking interest rates again. But it would definitely start to cause people to have a declining standard of living. And that would obviously also affect popularity of the plan going forward. But in just terms of the pure mechanics, also people will be spending less than that because the amount of stuff imported to go down, therefore reducing the amount of money we raise. Next, companies and countries are not going to be just accepting these massive changes in the underlying landscape of trade without reacting. So you will see there'll be substitution. You will see there will be people changing what they produce and how they produce things and what they sell to the Americans and how they they finance things, etc., in a way that will probably again reduce the amount of money collected by the tariffs. And then finally, the US has a very low unemployment rate at the moment anyway. It's not like they have a huge amount of free labor available, and definitely not the kind of labor that they would want to have to replace manufacturing globally, etc. They don't have the engineers, they don't have the artisans, the tradespeople that you would need to basically replace the global world, so the external world's exports to the US. And so if you do have these tariffs in place and are forcing companies to basically start employing people locally to do these things, firstly there'll be a shortage of labor, so there'll be shortages probably of the stuff being produced. There'll be higher wages that are being paid for labor, which is not a bad thing, but that higher wages will translate into higher costs for the goods finally produced, again affecting inflation, maybe affecting interest rates, etc., etc. So if you look at it on a second and third order effect, what you will likely see is that you would see a negative impact on the amount of money collected by tariffs. At the same time, you'd also see a negative impact on the economic growth of the United States and also on the economic welfare of the individuals in the United States, as they have to pay more for the stuff they consume. That would be the argument against it. Now, looking at the tariffs, that have been put out there, there is another aspect to it as well, beyond just the economic aspect. There is the political/military aspect, if I may use those terms, the geopolitical competition aspect of it, if you don't want to be going all the way to the military. The US is the dominant power in the world. Everyone knows that. It's the biggest economy, or maybe not anymore, but until very recently it was definitely the biggest economy in the world, the most powerful military in the world. It is the country after World War II, which was the most powerful country in the world, and therefore it allowed it to create the system that we live in now. So the 70, 80 years since World War II that we've seen, that we've currently lived through for the last 70, 80 years, that world, things like the WTO, the IMF, even to the UN, all those things were created by the United States. They made the system that we are living in. And the US was the dominant power for most of this time, or for all the time, in fact. Yes, they had rivals, a place like the Soviet Union. But if you look at Russia right now, Russia doesn't have an economy as large as Italy. Okay, it's a very poor country. It's very big. It had nuclear weapons. But the only thing that made Russia special back in the day was it was opposed to the US. And there were vastly larger countries that were existing in the world, but when the US's side, so they weren't considered to be a big rival. The US's big rival in the Cold War was Russia, which is not actually a real rival. The difference now is that the Chinese are a real rival. The economy of China is maybe bigger than the US. If you count in terms of purchasing power parity, which is how much stuff is actually in the Chinese economy, it is significantly bigger than the US. Even in terms of pure dollars, it's approaching the US size at the moment. So it's a definite rival to the US. The US is basically falling in relative standing to the Chinese. Historically, whenever you have a case where you have a rising power and you have a falling power, this is being known since the time of the Greeks. When you have one country rising, one nation rising, one nation falling in relative terms, there'll be conflict. Why? The nation on top wants to stay on top. The nation that's rising wants to get respect for being the number one or the new number one. Okay? And that means that we're going to have conflict, and we have conflict that may turn violent as well. And so we are seeing that happening right now. The US is declining relative to China. The US has benefits that China doesn't have. The US has a whole network of military bases, of international relations, of soft power, etc., that has allowed it to basically, kind of most control or be very influential at the very least in the rest of the world. Places like Europe, places like South America, Asia, Africa, etc., hugely influential. If the Chinese are rising, the US could technically use those relationships to basically create a team. So if the US alone is not enough to match China, the US plus its team of the EU and some countries that are friendly to it in places like Australia, Japan, etc., would make a rival that is vastly larger than the Chinese. That is one way to do these things. The other way to do it is what the US seems to be doing right now, is basically alienating all your allies, almost in a way driving them away from you by doing things like tariffs, in order to basically find a way to get yourself strong enough to face the Chinese, while at the same time trying to weaken the Chinese. The ally approach, I think, would probably be safer and would probably have a more sure outcome of winning than the kind of approach the US is doing. The US is just saying, okay, we are not as strong as we are relative to China, or were relative to China in the past, so we were much stronger than China in the past, now we're not as strong. Maybe the Chinese are as strong as us. Maybe they even are stronger than us. We can go out and get some of our friends together, so our friends and us together are stronger than China, or we can try and steal from our friends, we can try and take away from our friends, obviously, not steal, but take away from our friends, trying to get an advantage we can over our friends, to increase our own strength, so that we alone are now able to match the Chinese. That, I think, is a much riskier prospect, because you do two things here. Firstly, maybe you're not going to have the ability to basically be stronger than the Chinese. And also, maybe you alienate your friends enough that they are more amenable to the Chinese. And so if you need to basically form that alliance again, you may not have the partners you thought you had in basically facing off against the Chinese. But that seems to be Donald Trump's approach in terms of what he's trying to do with tariffs. Firstly, it's raise enough funds to basically cut income tax, and secondly, get the US stronger for a potential conflict with the Chinese down the line. Now, what will the outcome be for this? I don't know. Like I said, most economists, certainly all the prominent mainstream economists, say this is not going to be successful. But on the other hand, many successful business people, including people that have been, significant investment leaders, the Secretary of Commerce, the Treasury Secretary, have all done very well in the business sector, and should have a good idea of how the world works, how the economy works. They are on Trump's team. And it's quite possible that he might have stumbled into a plan that might actually end up being good for him in the long run. But we don't know yet. Until that is resolved, however, expect the uncertainty to continue. Remember, we haven't even hit 30 days, or sorry, 3 months, sorry. We haven't even hit 3 months in the Trump administration, and we have 4 years in total. So this is just a case of somebody is trying something very novel. We don't know the chances of success, but we do know that irrespective of whether it's going to be successful or not, the amount of uncertainty that we as investors have experienced is going to be quite high. And so in that scenario, you need to have a bit of assistance, a bit of diversification. Don't just bet on a single sector or a single country or a single even worse company. Diversification, smart diversification, understanding what the sources of revenue, the sources of exposure to these trade wars, etc., are for these companies that you're investing in. And basically be prepared to have a prolonged period of maybe multiple years of heightened volatility in the world economy. Okay, that's it for this week. Thanks for joining me. I look forward to speaking again next week. Cheers.